Welcome to Discovery Watch with John Kaiser.
I'm Jim Goddard. Welcome back, John.
Jim, it's good to be back.
John, on July 21st, you talked about Camino Minerals and its Los Chapitos copper project in Peru. In particular, you mentioned hole number 12 as being an important test of the deeper IP anomaly. You also speculated that management might choose to accelerate the expiry of 10.5 million warrants exercisable at 25 cents. The following week, Camino did indeed accelerate the warrants. This week, it reported results that included number 12. Was number 12 good or bad news?
Well, first, some background about what number 12 was all about. When this Los Chapitos delivered a discovery hole in April, the stock ran over $2 because we had a fairly high-grade interval, over 1% copper. And as we studied all the data that the company had assembled, it became apparent that at about a 250-meter depth, there was an IP anomaly off to the side from where the mineralization outcrops and where they were pushing these holes down that suggested a sulfide body. And the hope was that the copper sulfide would increase in this sulfide body. And there was also one about 4 kilometers to the southeast along the trend in the Vicky outcrop area, similar to at depth and offset. So the hope was that once they get into this sulfide body, we will see large tonnage and high grade develop. So hole number 12 was the first hole drilled perpendicular to the direction of the other holes, and it was angled so that it would hit the heart of the IP anomaly. And on Monday, I got tired of waiting, and so I put out a formal spec value hunter recommendation for Camino at 45 cents, saying, well, they have accelerated the warrants. They probably will get that $2.5 million in. We may see some pressure in the intervening period between now and September 11th, which will be a good buying opportunity. The company will be well cashed up. It is still an interesting project, even if that sulfide anomaly does not come through. So you kind of have a dual-pronged strategy. Buy it now and maybe suffer a little bit of downside if the sulfide anomaly does not come through, but expect a substantial pop on the upside because the market had gone pretty negative on this project. Well, with my bad timing, the company put out the results the next day, and hole number 12 was great until it hit the IP anomaly. And it turns out the IP anomaly is associated with what they're calling a hypabyssal volcanic unit, where the mineralization very quickly fades out. And I talked to Ken McNaughton, and he was disappointed that he says this sort of phenomenon, he's seen it before. It's not really sulfides that are causing the IP anomaly, but pretty much the IP anomalies are no longer a targeting tool for this project. But they did get good grades before that, which confirms that they're dealing with a sort of a breccia unit that has high grades. It appears to be associated with a structurally controlled feeder zone, and they are going ahead gangbusters. They've got 8,000 to 10,000 meters planned for delineating the Adriana zone, marching in a southeast direction. At the Caddy target, where there was no IP anomaly, and they had, a month ago reported results that were not very impressive. They drilled in a different angle and got good results. So they plan to do another 2,000 to 3,000 meters on the Caddy zone, and I think over the next 2-3 months as they march through this trend, they will put together a resource. It's not going to be a spectacular resource unless they luck into something very different. They will be able to start drilling probably late September at the southeastern end of the trend in the Vicky area, and that could provide some surprises. Until you drill, you just don't know how big the structural traps are. And they've also applied for a permit for the Atajo zone, which is off to the west. It's a completely separate target, though linked to the same IOCG mineralizing event. And that itself could produce something good. So we're going to have a company that's well cashed up. The market responded positively to the news. probably didn't really realize that the IP anomaly is now off the table, but it is seeing the good copper grades. And Camino Minerals will be presenting at the Metals Investor Forum in Vancouver on Friday, September the 15th, where I am speaking. This is just a one-day version of what's normally a two-day conference. And I believe Ken, who's right now in Peru checking out on the ground what his crew is coming up with, should be back ready to give us hopefully a significant update. One thing that impresses me is they do use an XRF unit, and I asked Ken, okay, why are you moving forward so aggressively? And they've got a dozen holes in pending mode. And he says, well, we're seeing copper in all the core with our XRF unit. This is a project where we have to keep marching on, and it is a discovery play that is unfolding, not as spectacularly as initially hoped, but still marching in the right direction.
John, a few months ago, you were pretty unhappy about your favorite zinc stock, InZinc Mining. The Junior just published an update on its summer work program on the Indy project in British Columbia. It also stated it'll be presenting at the Metals Investor Forum in Vancouver on September 15th. I presume you're still the only letter writer that likes this company and invited InZinc to present as one of your picks. What has changed?
Well, one thing that hasn't changed is that there are more newsletter writers supporting the company. I am, in fact, still the only independent newsletter writer who thinks InZinc Mining is one of the most undervalued juniors on the market. But that hasn't really helped me this year. I was very bullish in the beginning of the year because zinc had hit $1.20. At that price, the West Desert project, as envisioned by the PEA from 2014, looked was in the money and hits the thresholds for being developed. And also, in the wake of the Hermosa Taylor discovery last year, which took Arizona mining from 35 cents to $3.50 when the initial deposit that didn't really work so well when they did the pre-feasibility study on it, they started rethinking that project and drilling down dip down the structure, and have just come up with a fabulous new discovery of zinc and silver, and they attracted $110 million financing from South 32 in late April, May of this year, and that project's just going gangbusters. So I figured the market would really like a story like InZinc, which is a similar type of skarn replacement, carbonate replacement type system, already has an existing resource that people can treat as an optionality story. And with the market shifting into discovery exploration, they would have a lot of appetite for drilling this area where there was this hole that Cyprus drilled decades ago, number CC43, which intersected 3 meters of 7.65% zinc, 3.5% copper, and 25 gram per ton silver. And this was all by itself, 650 meters east of the main skarn magnetite-hosted skarn deposit, but it was never followed up because it was easier to just track the magnetics and drill off the skarn deposit. So I got my recommendation and coverage got the stock going. It hit over 30 cents in January, February, and then it just hit a wall of selling, which turned out to be InZinc's only institutional shareholder, George Ireland, who had converted his hedge fund Geologic Partners into a family office after suffering severe redemption runs in the past few years due to the lousy performance that exposure to the junior resource sector caused during the bear market. So that pretty much took the wind out of the market sales, as everybody wondered, where's all this selling coming from? When it became apparent that it was the largest shareholder that was liquidating, the audience kind of lost its enthusiasm. And then management, Kerry Curtis, had made a strategic decision to go after his former institutional contacts in Toronto, went on the road, visited 60 institutional-style brokers in Toronto, got meetings with all of them, but basically came back empty-handed. And when the market realized this in April, and that the company was going back into hibernation, and maybe spend a little bit of money on the Indy prospect, which is a much earlier stage project. People just started liquidating, and it drove the stock down to 11 cents, made me extremely unhappy. This year has been followed the pattern of normal years in the junior cycle, very much different from last year. We had our January effect rally lasting right through PDAC, and then the PDAC curse kicking in April as the sell in May and go away psychology kicked in. Summer doldrums stalling the market. Metal prices stopped rising. Zinc retreated back below $1.20 as people lost faith that any sort of infrastructure boom was coming under Trump's presidency. And the funding window closed. We had incredible funding in those first 4 months of this year in the junior space, as big as it was in June of 2011 before things started to fall apart. And so InZinc was sidelined. And people would come up to me and ask me, well, what do we do with this thing? And I said, well, management seems to have decided to keep this story moored at the dock, and we don't really yet have a strong bull market in the resource sector. Some of my bigger stories, such as Scandium International, we don't yet have the liquidity event, but when that gets into the big league over the next year, we'll have liquidity. It'll be nice to have a company that's very undervalued, still available cheap to buy when we're all finally cashed up. And just as I'm sort of settling into this consoling self-advice and advice to my readers, Kerry Curtis decided maybe not counting on the institutional audience to wake up, go back to the retail investor crowd, called me up and said, is there a chance to be at this metal investor forum? And I sort of realized, well, what's going on? He says, well, we spent last 3-4 months really going through the geology in even greater detail than we did last year, and we really think that the exploration potential at West Desert is extraordinary, and we do understand that this is not something the institutional audience is very much interested in funding. So yeah, we want to present the story to a retail audience. So I think this will be a really good show for InZinc. They'll be able to show what they've got there. The stock is very cheap down here at sort of 14 cents. There's lots of companies now that have zinc in their name. The various promoter groups have assembled zinc assets and stuffed them into shells and renamed the company. So it's like ABC Zinc Corp and so on. So there's a lot more competition out there, but fundamentally this is still a very, very interesting story. And the company doesn't have to raise $3 million in one shot. It can go and maybe raise $1 million from an audience of retail and high net worth investors over the next month. They can work on West Desert throughout the year, unlike Indy. In the case of Indy, they did a geochemical soil sampling program. They don't have the results yet. They'll have them later in the year, and this might be something that they test next year. But it looks like management has refocused, is pumped up about the West Desert, and this stalled story appears to be ready to be back on track.
Discovery Watch with John Kaiser will be back right after the break.
Aben Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Aben's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at abenresources.com.
I'm Larry Ray, President and CEO of American Manganese Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're chatting with John Kaiser. John, last year you introduced Endurance Gold and its Elephant Mountain project to Discovery Watch. The company reported some interesting drill results, but the program was small and the story just seemed to fade away. But Elephant Mountain continues to be the flagship play for Endurance. Can you give us an update?
Well, Endurance Gold has gone back into the field to try and understand its target better. It is essentially an intrusion-related gold system with several good gold arsenic anomalies. They have some drill holes in it, but the drill holes are all generally 100 meters of 0.5 gram per ton gold, which is not good enough to make a mine. But it is a large system, and it was discovered and explored in the early 90s by Placer. It has never been seriously followed up because at the time, Placer also made the Donlin Creek discovery, which is also in Alaska, except much farther to the northwest in a fairly remote area. There, the grades are substantial, 2 gram per ton, 40 million ounces. It is refractory, and the remote location means that even at the current gold price, this is a hard sell to justify putting into production, which is why it's this grand optionality play that all we need is something like a $300-400 real price gain in gold, not some inflation driven gain that drags the cost along with it. And Donlin Creek will be a big winner. But Placer also had some title issues in the Elephant Mountain area, and because the initial results were, much lower grade than what they were getting at Donlin Creek, they just gave up on that, which is how eventually Endurance Gold came up with this. Now, they put one hole into the north zone last year, and they put a couple into the south zone. And in the south zone, they got this narrow but high-grade gold antimony intersection. And they drilled another one, and that wasn't quite as good, and so they were sort of wondering, we need to find some of these higher-grade feeder zones within this large, low-grade system. So this year they conducted an IP survey, and one of the things that it illuminated is in an area to the southwest of the north zone, what they call the pump zone, and there they can see an IP anomaly showing up at about 100-meter depth. And it's also closer to what they call this Elephant Mountain fault, which is an east-west trending fault. And interestingly, the IP anomaly fades away as they get close to this fault zone. But Robert Boyd thinks that the fault zone is exhibiting oxidation. So what we're seeing is stronger sulfides away from the fault, fading away as the oxidation kicks in, and of course makes the sulfides disappear. And so they would like to do a drill program, put some holes into the pump zone, and also perhaps some closer to the fault, what they might call the central zone. But they also have an IP target that emerged just to the east of that hole in the south zone that they had drilled in the southwest direction. And they realized they need to step back 100 meters or so and drill into this anomaly. So they put out this news release not too long ago outlining all this, a great presentation on their website. But unfortunately, they do not have the cash at the moment to mount a drill program. They would like to do one in September. The stock's down at 5 cents or so it's kind of hard to finance. They do have shares in a company called GFG, which they got from vending a property in that Rattlesnake Hills project area to this new company which acquired the old Rattlesnake project from Evolving Gold, and that's now run by people associated with Gold Standard. They may be able to raise some. They've got a couple of large shareholders, Ross Arnold and Richard Gilliam, who own about half of the 100 million shares that are issued right now, and they own a bunch of these warrants, which they conceivably could exercise. And they also own 25 million shares of Inventus Mining, which they got last year by selling their 30% interest in the Pardo project to Inventus for this stock. This project the Pardo project is a conglomerate bed-hosted gold system in Ontario, which the late Duncan McIver had generated over 14 years ago before he passed away. And and then Robert Boyd took over the company, and eventually they optioned it to the company that is now Inventus. And they had disagreements about how to proceed. So they finally said, okay, give you guys 100%, give us an equity stake. And unfortunately, the equity stake is so large that it's more than 20%, so they're not in a position that they can easily sell that. So it's a bit frustrating for the company. It's an interesting project that they have at Elephant Mountain, but we don't know when they will be able to do work. I personally have been accumulating it as a bottom fish, as a long-term bottom fish. It would be nice if they get something going in the fall. But otherwise, I'm treating it as one of these long-term accumulation stocks, which I strongly believe are going to be in a very big discovery exploration bull market next year. So it's an example of something where I, with a long-term perspective, and accumulating now at rock-bottom prices.
Peregrine Diamonds completed its guaranteed rights offering. Did Rick Rule have to buy any stock under his firm's guarantee?
No, Rick Rule did not have to take down any of the rights. It was almost 103 million shares at 10 cents. Half of that, just under half, was taken down by insiders, which was primarily Robert and Eric Friedland, but only 86% of the total offering was directly exercised, which means about 14.5 million shares that could have been acquired through the exercise of rights. Well, those rights were allowed to die by their holders. But what was really interesting is that the company received oversubscriptions for 53 million shares. Now, if you exercise all your rights, you are entitled to put up money to buy any of the shares that would be issuable for rights that had expired. So what happened was there was tremendous interest for oversubscription. Nobody wanted to buy these rights in the market, which it took 3.3 for them, but they would have only gotten 20% of what they asked for. So Rick Rule did not have to do anything. He has his 2 million bonus warrants, and that's really not incentive for him to lean on Robert Friedland and get him to spend some money on marketing and get this Peregrine Diamonds out of the doghouse. Right now, it's churning at 12 cents, possibly because arbitrageurs did the oversubscription, got their shares, and are now grinding out the stock to collect their 2 cent, 3 cent arbitrage profit. The stock was generally 13 to 15 cents. It did not grind down to the exercise price, such as has happened with past rights offering. So it is surprising that so many rights were allowed to die. And this has been a problem, which is one reason I demoted the company from a spec value hunter pick to just a bottom fish recommendation. Management's heart does not seem to be in seeing a higher price. They spend next to nothing on marketing compared to how much money, the enormous money they used to spend on marketing. It's as if they want the stock to get cheaper and cheaper. And, of course, there is reason for that, because this is the most undervalued advanced diamond project in the junior sector. It's in the money based on the PEA. The drilling that they have done this year has intersected the fairly good widths of the CH6 pipe at depth, so they have extended this another 250, 300 meters deeper, which means that they will be able to, after depleting the open pit portion over in 5-6 years, they will be able to go underground and continue mining. It all appears to be the same material, so it is very likely similar grade. So this project just keeps getting better and better, but it's really frustrating that the company is violating a basic rule in junior exploration, which is if you make fundamental progress, you finance the next level at a higher price. Instead, it seems that fundamental success gets punished by this company. So best is to take a contrarian view on this and just hope that there is some point where suddenly those guys want somebody else to finance at a higher price and finally pull out the stops and get some marketing going so that a bigger audience than just the insiders is watching this story.
We'll have closing thoughts from John Kaiser when Discovery Watch returns.
Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. A work program is planned for our Finland property that contains diamond-bearing kimberlite. Arctic Star trades on the TSX Venture Exchange, symbol ADD, and the Frankfurt Exchange, symbol 82A1. Please visit our website at arcticstar.ca or call us at 604-689-1799.
I'm Brian Fowler, president of Blind Creek Resources Limited, listed on the TSX Venture Exchange, ticker symbol BCK. Blind Creek is focused in the Yukon, Northwest Territories, and British Columbia. The company's key property is the Blend Project, one of the largest undeveloped lead zinc silver deposits in Western Canada, plus plans to advance the recently acquired, fully permitted historic engineer gold mine in the Atlan district of northwestern BC. Check us out at blindcreekresources.com.
Welcome back. We're chatting with John Kaiser. John, Novo Resources Corporation has had a roller coaster week, hitting $5.93 on Monday, then crashing below $4 before bouncing back somewhat. What's going on with Novo?
Well, it's really interesting what's happening right now. Earlier this week, there was a Bloomberg article talking about this story, and it was a pretty favorable article. It explained the whole WITS 2.0 and the origin of all this, and was reasonably sympathetic, but it did quote Brent Cook of Exploration Insights as, on the one hand, saying this could be absolutely massive if the WITS 2.0 hypothesis is real, but the project it is just absurd, its valuation right now. And yeah, it's a $700 million valuation for a project which has one little 2 meter by 2 meter, half-meter deep hole in the ground, for which a pretty phenomenal result has been reported. But in terms of the general context, this is probably the biggest story to ever hit the juniors. I've even called it the Bre-X redemption because the scale of this story far eclipses Bre-X. It's got a completely different texture of management on board. And some of the things, it's kind of interesting. I mentioned last week about Newmont going in there and collecting samples and that. It's going through similar steps that Bre-X went through more than 20 years ago. And yet this time, it's all being done professionally and competently. Now, what's causing the roller coaster activity in the market, beyond, a prominent newsletter writer basically saying this thing's a sell because it's absurdly overpriced, is that on September 5th, which is basically a week from today because it's the long weekend coming up, 27 million units done at 66 cents with a full warrant exercise about 90 cents. This comes free trading. Now, this financing was announced in April and then closed in early May. It was pretty much oversubscribed before anybody had any idea of what Quinton Hennig was up to in the Karatha region. Everything was focused on Beaton's Creek and its 300 to 400,000 ounces of whatever, 2.5 gram per ton gold. They were going to turn this into a, small capex, cash flow type operation. And it turns out that, Red Cloud Klondike Strike, which is one of these online portals, exempt market dealer, not your traditional brokerage firm where the brokerage firm signs up to do a financing, then the brokers flog it to all their clients. This is something where investors sign up and the financing gets listed and people do their homework and just decide whether or not to do it. So you would think that the Novo financing was snapped up by a bunch of high net worth investors, but in fact of the 27 million, 5 million went to Eric Sprott for his own personal account, but about 22 million went to about a dozen institutions. And that surprised me because institutions are run by people managing other people's money. And so it was understandable, okay, they went in there, they could see maybe a 50% or a double over the next couple of years. That's a good return on investment. And if gold goes to the moon, well, then it'll end up being worth more. So they went in there with modest, medium to long-term expectations. And all of a sudden, they have this extraordinary windfall handed to them when the stock was at $5, they were sitting on, when you include the warrant exercise, they were sitting on 1,300% profit. Now, this is a problem for these funds because, one, this position is a high-risk position, which suddenly is a bigger percentage of the portfolio than is probably allowed by their rules. And second, when you have all these people like out in public saying, well, this is severely overpriced, it's an absolute nightmare for them because when this thing comes free trading, if they don't sell and the stock collapses just as everybody predicted, they're going to be in real trouble with the trustees explaining like, why did you keep this position? So the market is anticipating a massive sell-off on September 5th, and it should probably start on Wednesday because of the 3-day settlement period, so they don't have to really go short formally. There's only 1.6 million reported short as of mid-August, so in terms of pre-selling, there has not been an awful lot. So, of course, the traders have been whipping the stock back and forth, creating the anxiety about what happens when 60 million shares suddenly come free trading into this market, held by people who, if the stock does go down, they probably lose their jobs for not selling. Now, this is going to be a very interesting 2 weeks coming up because the WITS 2.0 story is really starting to gain traction. And the company did a conference call on Wednesday, and I listened to it, and it's well worth going to the website and listening to it. You start to understand the scale and nature of it. And one of the interesting things I picked up was somebody asked about the WITS precipitation theory and the genesis of this WITS gold, and Quentin talked about it for a bit. But then he tossed in a little comment alluding to that they may have evidence. And while I was up there, he showed me some rocks that he had bought from these prospectors, which they call fossickers in that general region. And it was a tufaceous sediment in which was embedded very crystalline gold, not the sort of rounded-edged watermelon seed, detrital stuff that tells you that, well, these nuggets were reworked in an alluvial environment. No, this was crystalline gold, and there was no alteration. And he says, how on earth did this gold end up embedded in this tufaceous material, which would have been sort of volcanic ash that settled onto the ocean floor? And because Quentin didn't know where exactly it came from, he said, well, this is potentially the smoking gun. But what I read it between the lines in that conference call, that they may have found in situ versions of this stuff, which would support the precipitation theory. In the WITS Watersrand Reef itself, everything has been reworked. The origins of this stuff, where it might have formed and then still be available to be studied in this sense, it has long disappeared. And the importance of the precipitation theory is that it explains why these gold nuggets can exist over a vast lateral area, and you don't need to have in the hinterland and the uplands all these veins and things which somehow magically got eroded and dumped into the ocean in a very, very short time period. The ability of gold with a much higher solubility in the water chemistry at the time suddenly dropping out because there's a change in chemistry, possibly triggered by organic plant life growing in the water, that would allow this to be over a big area. And we're now seeing the Australian companies start to wake up. There's a company, De Grey Mining, another one, DGO. They own land to the east where Novo has picked up land that was open, and they suddenly realized, wow, we staked this for, the Archean basement rocks, shear zones and that might have some, gold system in it. But they're also realizing that they're sitting on the potential conglomerate beds covered by these Kailina basalt flows, and these stocks have started to pop. So the idea that this is WITS 2.0 and not just the local freak show at Comet Well and Purdy's Reward, it is starting to go traction. So the next 2 weeks are going to be very interesting as a much bigger audience takes advantage of this institutionally driven liquidity event. And I suspect there are a lot of parties on the sidelines who miss the boat, who get the big picture, and are waiting for this opportunity to step in and absorb, take the paper off the hands of these poor fund managers who own way too much. It is a predicament that reminds me of what Paul Stevens was trapped in way back in 1995 when he, as one of the biggest supporters of Diamond Fields through his Robertson Stevens fund, ended up with having the Diamond Fields on its way to $170 equivalent, representing way too much of his portfolio, and under extraordinary pressure from his trustees to liquidate that position. We have the beginnings of something like this in the institutional sector in the group that will have their positions come free trading on September 5th.
John, thanks for the update.
You're welcome, Jim.
We've been talking with John Kaiser, his website, kaiserresearch.com. I'm Jim Goddard.
Comments made on Discovery Watch are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at howstreet.com. Discovery Watch is a production of How Street Media Incorporated.